Der heutige Podcast wird präsentiert von der PPI AG. Die PPI AG ist seit fast 40 Jahren als Beratungs- und Softwarehaus erfolgreich für Banken, Versicherungen und Finanzdienstleister tätig. Als stabil wachsende Aktiengesellschaft in Familienbesitz verknüpft PPI dabei Fach- und Technologie-Know-how. Im Zahlungsverkehr nimmt das Unternehmen in Europa eine marktführende Stellung ein. Rund 800 Mitarbeiter konzentrieren sich ganz auf den Erfolg ihrer Kunden. Mehr Infos unter www.ppi.de.
Payment and Banking, der Podcast aus der Mitte der Fintech- und Payment-Branche mit eurem Host Sebastian Celada Ocampo.
Herzlich willkommen zu einer neuen Episode des Payment and Banking Fintech Podcast. Und da wir heute zwei englischsprachige Kollegen im Podcast haben, werde ich jetzt auch gleich auf Englisch weitermachen. And with that, I would say one more time, welcome to the Payment and Banking Fintech Podcast. Today with Mambu and Currency Cloud, both a couple of years ago, Mambu and Currency Cloud partnered by integrating Mambu's software as a service banking platform with Currency Cloud's suite of APIs, thereby enabling customers to rapidly deploy flexible enterprise class collections, virtual accounts, payments, and FX services. And before we go into detail, I welcome Piers Murray, Product Director at Currency Cloud, and Andres Benes, Senior Product Owner, Partner APIs at Mambu. Hello and welcome to the podcast.
Hey, thanks for having us.
Thank you very much, Sebastian.
Yeah, so the topic of today's podcast is how banks are partnering with fintechs to achieve digital transformation and goals for a better user experience. Before we go into that further, I would say, Piers and Andres, please introduce yourself. I think you can do that far better than I can do. Maybe we start with Piers, yeah.
Yeah, perfect. So I'm Piers Murray. As you said, I'm Product Director at Currency Cloud. And for those of your listeners who may not have heard of Currency Cloud, we are a B2B international payments and FX platform. And we are powering banks, fintechs, and FX brokers around the world to collect, convert, hold, send, and spend in 34 currencies to and from around 200 countries around the world every year. We were founded around 10 years ago, and more excitingly, we were acquired by Visa at the very end of 2021. So now, as part of the Visa family, really sort of helping Visa on that mission of uplifting everyone everywhere to be the best way to pay and be paid. I've personally been at Currency Cloud for just under 6 years, so I've seen all sorts of change at Currency Cloud during that time, really exciting change. And I've spent about a decade in product management. So before financial services, I worked in the global maritime industry.
All right. No, Andres.
Thank you very much. Yes, I'm Andres Benes. I'm Senior Product Manager at Mambu in the payments product team. And I take care of, let's say, the strategic integrations that we have with various partners on the payments area. I've been working in financial industry since pretty much 2010, so all my career, and in fintech since 2017, where I've done some various interesting projects, and the last one was a fintech startup of ABN AMRO, which was also quite interesting. So, long time financial background, Mambu is one of the only true SaaS leading cloud banking software providers, basically. And we've been around since 2011. And we're really specialized in, let's say, the real core banking engines of banks, lending, cards, payments, accounts, of course. One of our key features of our strategy is, let's say, the composable approach, where we believe that not everything can be built in-house by one provider. And this is really where, let's say, the partnership sits between Mambu and Currency Cloud.
Yeah, talking about the partnership, maybe we just go into detail regarding that. So both Currency Cloud and Mambu exist for quite some time, as we just learned. So the collaboration, if I'm informed correctly, is kind of 3 years old right now. Maybe tell us a bit more about that. How are Currency Cloud and Mambu working together exactly?
Yeah, I think it's indeed, talks have been going on for quite some time since we have very complementary products. And about 2 years ago, we started to really build, let's say, the product integration, where, let's say, we offer sort of a one solution, let's say, to our joint clients. And I think we've fairly recently completed that implementation. Therefore, we have, let's say, right now one integrated solution for both platforms.
I think we often talk about our companies in similar ways. We talk about composable banking or Lego bricks, that modular approach. And I think it's very much that is really come to life here. It's that single integration that Andrew's mentioned. It's the sort of the single connector that actually gives banks that ability to access the core banking components that they might need, as well as the FX and international payments and receivable pieces. But giving them that option to effectively pick and choose how they put those Lego bricks together to form the model that is right for them and for their end customers. So I think it's a really, really exciting integration. I'd like to think by two leaders in the respective spaces in this industry. And so I think collectively really, really excited for the future and what this will bring.
Yeah, absolutely. Yeah. And I think the future will bring a big advantage to our joint customers, where they can really scale, let's say, that product integration, and they can really save, let's say, on their implementation cost and complexity.
All right. So let's dig into the main topic, how banks are partnering with fintechs to achieve digital transformation and goals for a better user experience, the rise of fintechs and their impact on the banking industry. Let's talk about that. Fintechs have disrupted traditional banking models by offering innovative digital solutions and services to customers. This has also led to increased competition in the banking industry, with traditional banks struggling to keep up with the pace of innovation. So what's your take on that?
I view this as, I've said this a couple of times previously, but I view 2008 as the rough kind of line in the sand of where we started to see this next evolution and perhaps era of disruption. And I think there have probably been three waves of fintech approach, let's say, since that kind of time of 2008 post the financial crisis. I think the first wave maybe started just like prior to that, but really came to fruition in the late 2000s. And it was the unbundling that was led by fintechs on this new kind of approach of API first, piping data around the global digital economy. Fintechs, I think, unbundled. They took apart some of the key components and really went to market with specific parts of the financial services stack that were customer centric in this approach to maybe disrupt some of the banks. I think wave two was really then some of those fintechs starting to bundle more services back together again. So if you think about the super app concept that many fintechs are often trying to reach to arrive at, it is about bringing additional components back into their stack. And in some cases, the offering starts to look actually quite similar to what a traditional bank might have offered. And I think wave three is perhaps where we're in right now. It's this era of partnership, collaboration between fintechs and banks. And I would argue that in some ways it is a reaction to that part of wave two. Banks are looking for quicker ways to get solutions to market. They're being driven by their customers who are getting different experiences from different types of financial service providers. You mentioned the increased competition. I think that is there perhaps being driven by fintechs, but it is forcing all players within the ecosystem to rethink their approach, how they're servicing their customers, and to try to get solutions to market as quickly as possible. And I think just the last point I would add on this is I think we're really fortunate in sort of UK and Europe that we have a really progressive regulatory framework that has allowed all of this to come to fruition. If you look to the US, for example, they don't have that same concept of non-bank fintech in the way that we have here in UK, Europe. And we don't often talk about regulation on podcasts, perhaps, but it is a really, really key enabler, a foundation, building block for everything that has really happened over the past 15 years or so.
So you would see that as a UK/EU strength in that regard, definitely.
Definitely. I think I would say that the UK and EU are the leaders in this space, and we see other countries around the world replicating the kinds of policies, frameworks that we have here. For me, one of the key sort of licenses actually is the concept of an EMI, electronic money institution, or API, authorized payments institution, that exists within UK and Europe, and thankfully the UK still has that in place post-Brexit. But we don't see that in the US, and so you see this chasm between the perhaps some of the fintech startups that are purely sort of tech players versus the legacy banks who do have the banking charter, the banking license equivalent. But you don't see that middle ground that has really, really emerged wonderfully, actually, in UK and Europe over the past 10, 15 years. And ultimately, has led to fundamentally better experiences for end customers around this part of the world.
What's your take, Andres?
Yeah, no, definitely agree with the three phases. Very interesting input. And I think if you zoom in on the FX part, which is kind of the product which we share, is that it's probably even more so led to increased competition and driving down, let's say, the FX price that companies and consumers pay for, let's say, international payments. Because that used to be very, very dominated by traditional players who kept the margins and FX costs very high. Who had very little competition. And yeah, let's say with the introduction of fintech and players like Currency Cloud, Airwallex, that price went down and the product, so let's say user experience went up significantly. And you see banks like Revolut really sort of, skyrocketing on that. And I think, that's been really, really exciting over the last 6, 7, 8 years or so. To see this trend in this industry. It also has created a whole new, let's say, place to work. People working in finance can now also work not only at bigger traditional banks, but they can also work at fintech players. And has attracted a whole new sort of set of talent outside of the market, which was very interesting. And I feel very much at home, let's say, at the industry.
What's your take on this, Piers, specifically with regard to FX?
Totally agree. I think if we look at some of the reasons why some of those FX costs have come down, for me it comes back to this element of transparency. When customers can see at their fingertips on an app or on a website the difference in sort of price variation between providers, they then get that choice. And that transparency has only come through technical innovation. Again, the API piping that allows all of this data to be transported seamlessly between financial institutions across the global digital economy. None of that would have been possible without some of those sort of technical plumbing, let's call it, in place. And once end customers get that level of transparency that they have come to expect, we have all come to expect that level of instant everything at our fingertips in all walks of life, not just within financial services. And as soon as the lid is open, let's say, on Pandora's box, there's no going back. There's no way in which end customers will now say, going forward, I'm absolutely happy to have an opaque FX rate that will, I've got no clue, what the costs are that are involved in or the margins are involved that contribute to that rate that I'm seeing. There's no going back from this now. It is only going in the direction of quicker, more visible, more transparent everything, in my opinion. And that fundamentally includes FX and international payments.
Wir bringen die goldenen 20er Jahre zurück. Ja, wir wissen, für Banken endeten die vor 100 Jahren wahrlich nicht rühmlich. Deshalb kommt vorbei zur Banking Exchange 2023 in Frankfurt und lernt auf unseren Panels und Keynotes, wie wir heutzutage die Herausforderungen des Bankensektors meistern. Backstravaganza heißt das Motto und deshalb diskutieren wir in prunkvoller Great Gatsby-Atmosphäre am 1. und 2. Juni über Themen wie The Biggest Pain Points in Banking, Embedded Finance, Next Generation Banking, Investing in Women und zahlreiche mehr. Dazu begrüßen wir Top-Fachleute wie André Jerens von McKinsey & Company, Patricia Battenberg von Worldline, Dr. Peter Robejek von Mastercard und viele weitere. Das alles begleitet von einem Rahmenprogramm, das euch in die Zeit des großen Gatsby zurückversetzt und mit Prunk und Lebenslust fesselt. Mit erlesenem Champagner aus Kristallkelchen, Lounging auf roten Samtsesseln und Musik von Charleston bis hin zu fröhlichem Swing. Seid dabei und erlebt 2 Tage Banking-Experten und Backstravaganz in einem unvergesslichen Event. Wir freuen uns auf euch. Backstravaganza am 1. und 2. Juni im Club Gibson in Frankfurt am Main. Tickets auf www.banking-exchange.de. See you there, old sport. So let's talk a bit about the benefits of partnering with fintechs. Banks can leverage fintechs' expertise in areas such as artificial intelligence or data analytics to improve their digital offerings and enhance the customer experience. Fintechs, on the other hand, can benefit from the scale and customer base of established banks. So maybe elaborate a bit on this topic. Maybe first, Andres, this time.
Yeah, I mean, absolutely. The benefits are quite clear of cooperating together because banks have a more traditional way of viewing technology and tend to have a slower pace at developing, let's say, new products, whereas fintech have this at the very heart of their company. and therefore can deploy newer technologies, can, let's say, move faster, sometimes also regulatory. They're not as much on the scrutiny as the, let's say, bigger players. So they can move a bit faster there. So cooperating there together is a very obvious, let's say, choice. On the other hand, you also see I think you see some struggles where there's culture clash between the two, where some of them really are in competition with each other, because, let's say, the real bigger global banks, they have products offering to fintechs, but then in turn they compete with, let's say, the more regional or local banks. So fintechs are also in competition with each other. Therefore, not all partnerships are logical, but you definitely see, let's say, the overlap there. And really the potential for working together. And I think you also see a lot of acquisitions by banks for fintechs or investments, let's say, from their venture capitalist funds. So yeah, it's very interesting how that will develop in the coming years, especially now fintech is becoming more of a mature industry rather than compared with let's say earlier start years.
Yeah, I think that's very interesting. I would like to get your take on this as well. Like, what do you think the future will hold in that regard? Because, from your practical knowledge, is the gap closing between fintechs and established banks in that area? I mean, as you just said, there are banks kind of eating up rising fintechs and integrating them into their own structure. There are also in some areas banks that kind of start their own fintech side company to be more agile, kind of semi-outsource stuff. Is that something also specifically with regard to FX that is kind of becoming a problem maybe? Or how do you see it? Is that a real threat maybe in the future, or how is the industry developing?
No, I think on FX, the threat, let's say, to regional and local banks is real from fintechs. Currency Cloud, I think, already has shown that they can definitely eat away some of the market share that these banks traditionally have. Yeah, starting up their own fintechs within the banks is definitely a way to accelerate certain product innovation. But you have to be very careful, as from an overall bank management perspective, to really let the two coexist. So the more, let's say, traditional departments next to the fintech department, because that can definitely bite each other. Let's say, different interests within the bank may impact, let's say, the result and successfulness of such startups. Yeah, I think ultimately the further collaboration between banks and fintechs will increase competition even more and drive down prices even more. Whereas banks really have to look into their cost and really try and reduce the operational costs which they have.
Would you agree with that, Piers?
I would echo everything that Andres has just shared. I think it's important also to move away from the broad bucket of banks and fintechs, because actually we're talking about 10,000 banks globally, thousands of fintechs globally, or even within UK, Europe. And there is a huge spectrum of what those banks and fintechs are providing, what they specialize in, where their strategic kind of corporate directions are taking them as well. And when we think about fintech banking collaboration and partnership, there is this phrase in the UK where we say it's horses for courses. It's about finding the right customer needs, the right customer demands, and from both sides, understanding from a bank's perspective, perhaps, where is it that we really, really need to double down in terms of our digital transformation journey? How can we do that as quickly as possible and achieve those customer demands as quickly as we can in a way that actually really, really solves for those customer problems? I was at a conference here in the UK a few weeks back called Pay 360, and I think it was the head of payments at Lloyds Bank was on stage, one of the keynote sessions, and she said, "Gone are the days of banks like Lloyds building all of this themselves." And it was a really, really key phrase, and I think kind of represents what Andres and I and the rest of our companies are seeing here, that at the very, very largest end of the banking spectrum, yes, there is huge deep pockets of money by the largest banks being ploughed into concepts of digital transformation. But not that far below that, there are banks who are actually seeing that specialists, fintech specialists, can provide speed to market, can provide expertise in particular areas, maybe niche areas in certain parts, and find a way to actually delight their customers in a way that is far, far quicker and easier, probably with a lower total cost of ownership than they've ever had before. So that phrase from the head of payments at Lloyds has kind of stuck with me over the last few weeks, and I'll probably be using it a bit more going forward.
Okay, so let's dig a bit deeper into that specific topic, the future of banking and fintech partnerships. So the trend of banks partnering with fintechs, as we just discussed, is expected to continue in the future as both parties seek to leverage each other's strengths to create better digital, bigger probably as well, solutions and services for customers. And as new technologies and trends emerge, it will be interesting to see how banks and fintechs will work together to stay ahead of the curve. So slightly different phrasing of the question, but still, what's your take on this? And maybe elaborate further, and we stay at peers, I would say, before we switch back to Andres.
Yeah, so I think the future is actually dependent upon the past that we've talked about. Since 2008, we've moved from this product-first mindset to a customer-centric approach, and that approach will be the one that stays. And I think I'm seeing with the conversations with many different banks, that shift in mindset that is really, really starting to appear across many banks. And the result of that is that customer demand is actually driving this change and will continue to drive this change. Arguably, we've seen probably the most disruption in the retail industry, but in my opinion, there is this trickle-up effect from retail into small, medium-sized enterprises and then to large corporates, in the same way that we are used to doing everything on apps on our iPhones or latest smartphones. We expect to be doing the same in large corporates as well now. And there is also this trickle-across effect from a domestic experience into the cross-border space. So if we think about in the UK Eurozone, things like faster payments or SEPA Inst within the Eurozone, these are experiences that have been built domestically, and I use domestically in the looser sense of the word, obviously in the Eurozone, but they have been built sort of domestically and have changed the customer experience in terms of what customers are then demanding in terms of other experiences across the stack. So certainly we're seeing that trend really that's at the forefront of the FX and international payment space. But I think going back to your question, Sebastian, around the kind of the future of banking and fintechs, I think for banks there's probably a finite set of options. There is do nothing, and I think my suspicion is that will likely end to that bank either failing, becoming irrelevant, or being acquired. There is the build it yourself approach, which may work in some instances, and there may be very valid reasons for banks still to choose to do that, but I think given the pace of change that we have seen, and that pace I believe will only increase, it becomes a high risk kind of strategic decision to make. And then probably the third is to partner in the relevant areas to achieve those goals, to remain relevant, to retain that market share that where things like trust in the bank is still extremely important. Many people still fundamentally trust their banks for the ability to hold their funds safe, and that taps into the human psyche, into the emotional part of our brains, and that is valuable. And I think fintechs have been, especially sort of customer facing fintechs, have been doing a lot to try to disrupt that and to win that market share. Fundamentally, businesses still trust in banks to a great extent, and the future will be around banks being able to extend the level of services, the value-added services, quickly to the different types of customer bases that they have.
Andres, your thoughts?
Yeah, Piers, absolutely. I completely agree. It's very interesting. They have indeed the three options. I think the first option is still, it seems still probably within banks, a viable one. They don't believe necessarily that it might go as fast. I do believe otherwise, and I am definitely with you on let's say the latter one, let's say the third option, where they have to, for some key areas, have to go into strategic partnerships where they leverage, say, the products that are being built by fintech. And I think that's a huge opportunity for banks because, as you say, they have the trust still, which is absolutely, let's say, key for them doing business. And if they choose, let's say, the partner wisely and very strategically, and really sort of nurture that relationship, go in it on an equal basis, they can absolutely accelerate product innovation, and then therefore retain, let's say, the client relationship, because ultimately the money is in that client relationship. Like if you still hold that sort of direct interface with the client, that's where you can have, let's say, still the highest margin, and you can still sell off other parts of your bank more easily if you have that one-to-one relationship. But I think also certain fintechs will go a different way and will actually start to attack the banks for some of the services that they have, and might become bigger. I mean, we haven't even talked about the, let's say, Apples and Amazons of this world, or Alipays of this world, that are really chipping away at the market share of the bigger banks. I mean, Apple launched their 4 point something interest product, or announced at least this week. I mean, that's going to have a huge impact on the bank. And I think, with the bigger tech driving, let's say, that development, the third option where banks have to work with, let's say, some of the more medium-sized fintechs will become more necessary.
I think what's interesting in the Apple example, which is a great example, is that actually under the hood, a lot of this is powered by the traditional banks. And so it is this concept of bilateral relationships. Like, we've talked about correspondent banking for decades within this space, but maybe the next era for the next 10, 20 years is about correspondent partnerships or something similar, right? It is this set of bilateral partnerships, relationships where both parties are able to benefit from a commercial perspective, but providing those services in different ways, in better ways, more cost-effective ways, more transparent ways to the end customer. And part of that from a bank's perspective, I think, is then about reassessing perhaps the overall strategy. What types of services do I as a bank want to go and provide, and how do I want to go and stay relevant and or service other players within this wider ecosystem, whether that's fintech or big tech?
In your opinion, Andres, what are the requirements for banks to cope with such tasks in-house rather than sourcing certain products out, certain projects? Is there a kind of a formula for to be able to succeed, or like certain threshold of, I don't know, resources? Is there none of them? Like, what's your take on this?
Yeah, very interesting question. Of course, there's not one formula for success. But what I have seen is, let's say, that there needs to be a relationship forged, let's say, on mutual sort of basis, where you kind of move away from the traditional bank vendor kind of relationship where, bank tells vendor what and when to do, let's say. I would go into some real relationship building exercises at the beginning to really see and make the cultural fit before you really start, let's say, embarking of building and really closing, let's say, the partnership. I think, that's key for success. Other also is to, for banks to really try and move to more modern technologies, at least the outside layer, because if the systems can talk easier to each other, if implementation is easier, then it's easier to show the success at an earlier stage. I think when it takes really long, banks get impatient, management get impatient, and results are not there. There's definitely a likelihood that it will be broken off again. And I, as a bank, I would also hire maybe some talent from the fintech industry when you embark on such a project, because they will bring some of the culture, some of the way of working inside the bank, some of the way of thinking, which is different, quite different, I've seen.
I'd agree. So much of this for me is involves, maybe not centered around, but definitely involves culture, ways of working, a mindset shift in many cases as well. I think if any bank who says that they are 70% of the way through their digital transformation journey is thinking about this in entirely the wrong way. This is something that needs to be embedded into the philosophy, into the core of any institution in this day and age, not a sort of tick box exercise that might take 2-3 years to complete and at the end of which you find that the sort of the waterfall planning process has actually fundamentally got to the wrong outcomes that customers are no longer looking for. So this has to be embedded within the DNA of financial institutions around the world, not something that is done purely as a one-off exercise.
Yeah, absolutely. And I think also internally, you should try and map it towards your internal cloud journey, because most of the fintechs are using, let's say these public cloud providers, and really, try and see how that fits together. Let's say, really scope and map the project out like that.
All right. So let's talk about the Mambu and Currency Cloud partnership. Maybe a little recap so everyone is on board, like all the listeners. Mambu is a cloud-based banking platform, Currency Cloud a cross-border payments provider. So what I understand, the goal of the collaboration is seamless end-to-end banking experience for the customers. We know that Mambu's customers have the ability to access Currency Cloud's payment infrastructure and services directly from the Mambu platform, enabling them to make cross-border payments in real time. So now, the question, tell me why the partnership is a good fit, and I give you a little challenge for the answer, even if it might be tempting. Just try to cut all possible PR and marketing talk out as much as you possibly can, and try to get to the very core of why it makes sense that the two companies partner in this regard and what the benefits are. And maybe also what is about to be optimized in the near future, and if there are further plans and milestones for the roadmap ahead. Maybe Piers first.
So I'm going to go back to this Lego brick analogy, because I think we both use that term as Mambu and Currency Cloud. We both have used that term to describe our modular API services, software as a service. And perhaps one analogy is to think of Mambu and Currency Cloud prior to this collaboration, prior to this partnership, as offering the pieces of Lego in two separate boxes that were perhaps in two separate shops, maybe in two different cities. What we're doing is bringing together those pieces into one packet, into one box that a bank is, or another fintech is able to consume through one single connector. And that becomes incredibly powerful, because we are still giving clients that choice in what types of solution they want to get to market, what types of customer problems they want to solve, but doing it through one single integration that reduces risk in terms of the actual risk of integration. It removes future technical debt of having to stay on top of multiple integrations with multiple providers going forward, and probably overall adds to or reduces total cost of ownership and gets your proposition to market in a much, much faster time than I'd ever expected before.
Moving over to Andres.
No, I think if you zoom out on a bit of a more strategic level, let's say, is that I think both companies have at the heart that, building everything yourself is a fool's errand, pretty much. And Mambu has no interest in sort of building a network of various correspondent banks in order to transform and transport international payments around the globe. But of course, our clients are very, we offer a deposit account, which of course needs payments because you need to move in and out of that deposit account. So there's also not one single payment provider out there in the world that provides every single payment scheme. Therefore, if you can connect certain payment partners via one single API to your platform in a cost-effective and scalable manner, then you have a very, very strong product and a very strong set of building blocks for your end customers to use. I think the partnership is actually a result of the sort of modern fintech way, what we've pretty much discussed over the last half hour or so. And from that perspective, it's a very natural fit and almost a organic fit that the two companies would come together and have this sort of end-to-end solution for our clients.
Du bist eine Technologieplattform oder ein Marktplatz und willst Payments anbieten? Mit GetPaid erhältst du die volle Kontrolle über den gesamten Zahlungsvorgang, vom Onboarding bis Payout, inklusive aller gängigen Zahlungsmethoden. GetPaid richtet sich speziell an komplexe Multi-Party-Anforderungen von SaaS-Plattformen und Marktplätzen. Das heißt weniger Workarounds, einfachere Reconciliation und die Möglichkeit, deine Payments zu monetarisieren. Erziele somit bis zu 4-mal mehr Ertrag auf deine Payments. All das ermöglicht durch eine einfache Low-Code-Integration, ohne dass du ein großes Team an Engineers beschäftigen musst. Teste GetPaid noch heute unter www.getpaid.io.
Maybe let's move to challenges and risks. What is coming to my mind is like, are there or might there be any regulatory hurdles ahead of the go live? I mean, as far as I understand it, like the go live happened like kind of 3 years ago. With regard to your specific partnership, was it all basically all set? You kind of joined forces, built the solution, and that was it? Or were there any requirements for that collaboration from a regulatory point of view?
Yeah, just to correct you, Sebastian, real quick there. 3 years ago, it was kind of the kickoff of the partnership. The go live with our first joint client was actually 2 months ago in February.
All right.
So just to get that straight, Currency Cloud offers Piers can tell that much better than I can, but Currency Cloud offers a very strong regulatory compliant product where they even allow non-banking advice to, let's say, process international payments. So I think from that perspective, Currency Cloud did pretty much the heavy lifting. But Piers, how do you see that?
Yeah, totally agree with that. I think from a regulatory perspective, this is about the conversation with every client. This is about understanding the nuances in terms of their setup, both technical and regulatory and compliance and beyond, and also understanding their direction of travel. Is it an currently unregulated fintech looking to become a regulated fintech, or is it a regulated fintech looking for their banking license? All of those, we're operating within this highly complex, highly regulated industry where regulation and some of the challenges change in different jurisdictions as well, or are slightly different across different jurisdictions. And so I think this is where I'd come back actually to the shared kind of culture and mindset. It's about partnering with mutual clients, really, really understanding their current setup and needs, and then being able to adapt the modular solutions accordingly, both across the core banking and international payments and FX piece. But I think it's just important to call out that this does require that level of conversation and understanding, but it's something that both Mambu and Currency Cloud are sort of absolutely set up to do and is part of our operating model day to day.
Let's talk a bit more about like those 3 years from basically like, starting the collaboration to the go live. So what was the kind of bigger challenge during that time, kind of connecting on a technical level, the Mambu and Currency Cloud partnership, or more like really going live with the actual customers?
Do you want to start, Andres?
Yeah. I was just sort of gathering my thoughts. I think there were some technical challenges. Yes, it's a very complex product Currency Cloud has, and there are many variances possible. So digging out the scope and requirements from a client perspective was definitely complex and took some time. I think also finding joint clients that really believed in that partnership after sort of the initial announcements, that also takes time, especially in our industry, because changing your core banking application together with your sort of payment provider is quite an sort of open heart surgery for some of the companies. I think it's very natural that it took some time to sort of materialize to the way it did right now. I think though during the time it was very pleasant to work with Currency Cloud, and they're very, let's say, knowledgeable and very supportive in that respect. So, that definitely aided and helped the process.
Yeah, I think from my side, Andres, you've used the term open heart surgery, and I think probably the perception is from some of the clients that might be the case, but I'm hoping that through this partnership that we're actually able to reduce some of those concerns and actually bring this back to maybe some more standard surgery. But all that being said, this is still fundamental change for key components within the wider ecosystem, within the wider infrastructure of a particular client, and that is where some of the complexity comes in. We're sometimes talking about migration from mainframes to microservices. It's that sort of transition perhaps for some clients, and that comes in itself with the complexities. Really, I think it's about having that in-depth conversation with real experts who understand how to help clients on that transformation and transition journey, rather than saying, here is a single connector, here are the API specs, go and work it out yourself. That's absolutely not what we're doing. We're enabling the ease of the integration and that surgery, let's call it, through the single connector, but still absolutely making sure that clients feel supported and that they've got a really kind of trusted set of subject matter experts to come back to ease them through that journey from A to B.
So, Piers, now that the first projects are made it to the go live, with all the experiences you gathered during the past 3 years, can you also talk a bit more about like the possible risks and threats that are posed to banks, or the challenges regarding that, also tackling cybersecurity?
Look, cybersecurity is huge everywhere at the moment. It is a topic, a subject that I think has to be embedded again into every financial institution's strategy. We, as I said before, we are in a highly regulated industry where the threat of things going wrong is huge, and when in cases where things have gone wrong, have sometimes meant the end of certain FIs. So I think that has to be table stakes. It is perhaps beyond the cybersecurity, the specifics of the cybersecurity kind of theme are probably beyond my level of expertise. I think one of the other risks more generally that I see in the banking space at this point in time are, this concept of B2C, maybe fintech providers that start to move out into the B2B offering, start to really capture more of the typical market share that or typical customer type that a bank might have. But that probably reflects some of the conversation that we had earlier around those different waves of fintechs and what's been happening. I think that will still continue to exist, and it is perhaps sums up our entire conversation around how do banks continue to retain market share and also acquire new customers. It is not just about customer retention going forward.
So maybe summing things up is like a good point you just made. Maybe as a last question to you both, how would you wrap it up? How would you, what kind of conclusion would you make at this point? I mean, it's an ongoing process regarding the partnership, regarding the challenges, regarding the road behind you, but also giving kind of a glimpse of what's coming up regarding that partnership and what the possible future milestones are.
Now that we have indeed, let's say, our product pretty much live and running, I think we see a lot of traction in the market as interest for this product. So I'm expecting that because we now have it live and we can indeed reduce the open heart surgery to more standard surgery, we will see a lot of more joint clients on this product, and we will continue to build out the functionalities. So we work with, say, Currency Cloud experts, but also, we have actually a second client that is going to go live in the coming months, where we will work with and really enhance the product, what we see. But you see also a lot of, let's say, feedback coming from the current client, things that have to be changed. So I think there, it's quite exciting to have that process going on and to have that process really kicked off. So from a product development perspective, exciting to enhance the product, but also from a commercial perspective, there's a lot of talk with joint prospects where we can really easily sort of demonstrate the benefits in those conversations. And I think, sort of really sell each other strong points. And that doesn't really feel like selling or so. That feels almost like sort of storytelling, taking the client along and really try and help them and reduce the, let's say, complexity of their future implementation projects.
Yeah, and from my side, look, I think we said earlier that we are in this era of collaboration and partnership, and we've got a proven successful partnership that is here. I know that we're both in product, and as product people, we love to have those conversations with clients or with potential clients, and to really try and dig into the problems that they are trying to solve for their businesses as well as for their end customers. So we're here to have that conversation and really understand how and what else we as both Mambu and Currency Cloud can do to continue to evolve our services to better meet the needs, demands, wants and challenges perhaps of our client base and customers beyond.
So Andres, Piers, thanks for being on the podcast. Thanks for sharing those insights with us, with our listeners. It was a pleasure having you. For all our listeners, as always, if you like this episode, please follow us. Please subscribe to our podcast channels, no matter where you are listening to, like whether it is Apple Podcasts, Spotify, or whatever your preferred platform is. And don't forget to subscribe to the newsletter if you haven't already. And looking forward to you all joining the next episode, and all the best for you, Andres and Piers. With that, goodbye and see you on the next one.
Thank you very much.
Thanks,
Goodbye.
Sebastian.